What if I told ye that nearly $19 billion vanished from the crypto market in less than 24 hours? Not a typo. $19 billion. The biggest liquidation in crypto history. Gone like smoke in a storm. And just when you'd think that kind of loss would scare investors away for good, the opposite happened. They're gearing up, bracing, betting on another crash. Because deep down, they sense something bigger is coming. Last Friday wasn't just another red day on the charts. It was the kind of chaos that tests every ounce of conviction in the market. Bitcoin plunged from a record high of $126,000 to just above $104,000 in a blink. Ether tanked more than 12%, and altcoins, they were slaughtered. DOGE dropped over 60, AVAX down 70. Even the hyped ones, Hype and others, lost half their market value before clawing back some ground. The numbers were brutal, but what caused it was even more shocking. It all began late Friday evening when President Donald Trump made an announcement that sent shockwaves through global markets. 100% tariff on Chinese imports. That single sentence, and his threat to impose export controls on critical software, unleashed instant panic. Investors knew what that meant. Higher trade tensions, slower global growth, and more uncertainty. And when uncertainty hits, risk assets like crypto are the first to bleed. Within minutes, the dominoes started to fall. Leverage positions began to collapse. Algorithms triggered sell orders. Liquidity vanished. In one night, the crypto market saw over $19 billion in liquidations. That's 9 times the February 2025 crash, 19 times bigger than the FTX collapse in 2022. Unprecedented, unbelievable, unforgettable. Now let's step out of the charts for a moment and think about what that really means. For everyday investors, the people who've been stacking sats, holding ether, believing in financial freedom, it felt like a gut punch. Some woke up to their screens flashing red, their portfolios cut in half. Dreams of early retirement or buying that first home, gone in a single day. For many, it wasn't just money, it was belief. The belief that crypto was the great equalizer. The idea that if you held long enough, you'd be part of the next wave of wealth. But when that wave crashes, belief turns into fear. And fear makes people do one of two things: run or prepare. And this time, the pros chose to prepare. Data from Derive.xyz, a leading crypto options platform, revealed something fascinating. While retail investors were panicking, institutional traders were buying puts, and lots of them. For Bitcoin, the most aggressive bets came at strike prices of $115,000 and $95,000. Both expiring October 31st. That's not just hedging. That's bracing for another free fall. They even started selling calls at $125,000 for the October 17th expiry, meaning they no longer believed Bitcoin would rise back up in the short term. Ether traders weren't far behind. The 4,000 and 3,600 strikes were hot zones for October, while a surprising wave of 2,600 puts were bought for December. In plain English, a lot of people are betting Ether could still drop another 30% before Christmas. Sean Dawson, head of research at Derive.xyz, said it clearly. Volatility just jumped across the board. Not only short-dated, but long-dated maturities. more people are worried about downward turns. Translation: the pros smell more pain on the horizon. But then, the weekend brought a breath of calm, or at least the illusion of it. President Trump softened his tone, saying, "It will all be fine. The US doesn't want to hurt China." That single sentence was enough to cool the panic. Bitcoin recovered slightly, climbing back near $115,000. Ether bounced over 2%. Even China held off on countermeasures, issuing a stern statement but no new action. For a moment, the bleeding stopped. But make no mistake, the scars are still fresh. On-chain analyst Willy, known for reading blockchain flows like a psychic reads palms, shared something hopeful. Bitcoin investor flows are holding steady. Money isn't necessarily leaving crypto, it's rotating. Wu believes capital is moving out of risky altcoins and back into Bitcoin, the blue chip of digital assets. Because when the storm hits, people run for shelter. And in the crypto world, that shelter has a name: Bitcoin. But for altcoin holders, it's a different story. Solana continues to bleed. Many smaller tokens are still gasping for liquid. And that's where confidence cracks. When the coins that promised the next big thing turn into the next big disappointment. Nick Puckrin, co-founder of Coin Bureau, put it best. This crash cleaned out the excessive leverage and reset the risk in the market. For now. But Bitcoin still faces an uphill battle to break past key resistance levels. So what happens next? If history tells us anything, it's that after every crash comes a cleansing. Weak hands fall away. Fear takes over. And those who remain, the ones who endure, often come out stronger. Yes, this was the largest liquidation the crypto world has ever seen. Yes, the charts look terrifying. But volatility has always been the price of revolution. Bitcoin was born out of crisis, and it thrives in chaos. Every crash, every panic, every sleepless night staring at those red candles. It's part of the story. Because this isn't just a market, it's a movement. One built on freedom, on trust. On the dream that ordinary people can take back control of their wealth. The question now isn't if crypto will recover, but who will be brave enough to stay when fear is at its loudest? So, when the next wave hits, will you hold the line?